The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Buckle those seatbelts, folks, because it's going to be a great little morning of trading, no doubt. The S&Ps have already gone from top to bottom, and bottom line is that that is an expected move. If you do, in my daily newsletter, if you take a look at that, this is the first time that when you talk about actually a trader's market, this is an extraordinary one, folks, okay? But you could just smell the counter-trend bounce this morning. And I suspect that's all it is, by the way, too. Because what happens, this would end up happening last night. So check this out. Last night at the close, and this is always a heads up, at the close last night, the last couple of trades after the market closed at 4 o'clock, all that was they pushed the indices, and particularly they pushed the NASDAQ. They pushed the NASDAQ 10 points, the futures on the close. It's like, man, I saw that happen. I says, you know what? This thing's going to be dead meat in the morning. Well, sure enough, 0400 in the morning, it goes dead meat. Now, when that went dead meat, however, bottom line is that you didn't have volume down at the lows also. So I suspect that, okay, you have a counter trend bounce. That bounce is over now, by the way, folks, okay? What we did is this. And inside your S&Ps, we just got back up to the 2111, 211.50. You'll test it a couple more times, but what you have hanging out here now, which is just really cool in general, is you have that high volume swing point down there that got jabbed at 930. So each and every time that we come up into these higher levels, well, individually we'll all do what we're going to do, but that's where the sells are, and the sells are lined up pretty nice right there. That's inside your S&P. If we look at the larger issues out here, the larger issues is that you're still on you're still at highs. You basically have zero movement. The SPY itself is at 211.64, and anything under 212.24 is absolute failure. We did have a failure yesterday in the S&P, the cash S&P. The cash S&P got over the February 25th high, which was 219.59. It went to 221, couldn't handle it, closed out at the 209 level, no, 214 level. Bottom line is that until it can get over that 2119 level, it doesn't mean a thing. That's how this whole baby is set up. We go over to the gold market. They continue to press gold down, and here's where we have divergence, and it's big divergence too. And what it is, it has to do with the aspect of, let me pull this up here. One second. There she is. Okay, so it has to do with the aspect that the dollar is getting hammered, and gold still can't move. Silver still can't move. We've done 101,000 contracts out here. You were broken a swing point. Now, if we get to 150,000 contracts, it's going to be an ABC down. And if that is the case, it's a pretty, well, it's 32. Yeah, it'd be a big one. 50-point ABC down, which would bring you into the 1155 mark. Well, it's only $20 from where we are. And the last lows are 1143 out here. So how we close out here today is crucial inside the physical gold market. And if we do 150,000 contracts, that would be saying that you're going to go after the lows that were generated out here on March 17th of this year. The silver contract, we take a look at silver. What do we have with silver? Silver is, she has 28,000 contracts. Oh, this is interesting. Okay, so check this out, man. This is going to be intense. I'm watching this shake out. So silver, what silver actually did yesterday was this. Silver did break a B point, and it broke it with volume. So your A point on silver is 17.75, and your B is 16.50. So it's $1.50, which would give you a 15.65 level. Yeah. You know, it broke with volume. Yesterday we did 56,000 contracts versus 35,000. Now you were coming into 77, so it's not quite well. It's definitely A to B equals C to D. What you do have, when you're doing an ABC structure on the way down or the way up, folks, what you're looking for specifically is you're looking for, if it's an ABC down, you'd be down with volume, up with lighter volume, down with volume. When we did spike on the first, we spiked up with volume. So that basically is saying that in the strict definition of an ABC structure, it wouldn't be because you had volume there. So we'll see how this baby does shake out. Silver right now is at 1622. 1612 is the number that it's going into, and the volume is light right now in that silver market. Volatility out here is going to be wild, and has been wild. The DAX in Germany made it all the way back. And the DAX in Germany, folks, you want to keep your eye on this DAX in Germany, because the DAX in Germany basically is giving huge amounts of signals as to where our markets are trading, particularly where our markets are trading intraday. We go back over to the NQs. If we take a look at the NQs out here, so this is what you have inside the NQs. This one is an absolute classic, man. It's going to be wild watching this shake out. You came right back to ICE. That's all we did. Now, you know, if you're watching Tiger TV, what you're seeing is that when we came down on the 3rd, right, we came down at 0930, and we came down with 19,000 contracts, right? When we were at lows this morning, there was 0 contracts down there. So it's like, oh man, you know, I did in the Nadex platform, folks. I had already gone long, and now I flipped the position. Now I'm short. That's the first time I went long in a long time. And what it was, you know, was all of a 3-minute trade at the open. The bottom line, what it was there was no juice down here. It's like, you're gonna be kidding me, man. I was figuring it's go big, but back to ICE. It was a gift from the trading gods, no doubt, because your first expansion up had 19,000 contracts. But when we got up to where ICE was, you only had 9,000 contracts. So what does that set up? That sets up, guess what? You're gonna take another leg down, and the first leg down in the NQs will probably get to 45.06. Right now we're at 45.17. You know, when you have a market like this, and this is what's dangerous, you know, when you are trading both sides of it, what will happen is that the surprises will be to the downside. That's kind of just how this market is playing out. You know, each and every time it'll come out of nowhere when this thing starts going south. You know, so if you haven't test drove the Nadex platform yet, get over to our website at TFNN, take a ride on it. You know, you can open up the account. It's free to open up the account. They put $25,000 of paper money into your account, and you can, you know, basically walk through these different contracts with us. And if I take a look at, so where am I? There she is. Okay, so right now, ESM5, where are we at? So we're at 2109. 2109, let's see, there she is, 2109, 2107 is 90 bucks, interesting, 3 minutes left, that's on the 20-minute ones. Yeah, I'm not going to do a 20-minute one just yet. Inside the NDX 100, let's take a look at what's moving markets around here. Inside the NDX 100, what you have is you have Dish Networks, that's up 442. Wynn Resorts is up 579. We'll have to see what's going on there. That's a dead cat bounce. SBC Communications, man, you don't see phone companies up $4. I guess we do now, though. Oh, I see. Potential Dish mobile deal. I see what's happening there. Okay. And we have Mylan Pharmaceutical up $1.04. Taking points away from the NDX 100, you had Western Digital is down 189. We have Vipul Communication off 11. Whole Foods is down 51, and you have Seagate Technology down 68. Inside the Dow Industrials, we take a look at the Dow Industrials. leaders versus the laggards. The leaders out there is Goldman Sachs. That's up $1.52. You have McDonald's up 39, Nike's up 52, and you get J.P. Morgan Chase up 20. Taken away from it is Verizon down 82. DuPont is off 64. Merck is down 47, and Boeing is off 109. Some of the higher volume stocks, and we'll see what kind of juice we come in with the market today. We have, let's see, Marbell's up 19. We have Chesapeake Energy down 44. T-Mobile's up $1.94. FireEye is up 146. Inside some of the Dow Industrials, we have Honeywell up 72, down 72 rather. Walmart's off 9. Exxon's down to 36. You have Oxy down 35. Our phone number is 877-927-6648. And there's no doubt that what we have, let's take a look at actually some of the commodities out here. Because where the disconnect is, there's no doubt the dollar keeps getting hammered, but guess what? Commodities basically also getting hammered. We take a look at the oil market. Oil's trading at 58.48, and that's with wicked light volume. Okay, so what oil looks like it wants to come back to its day of strength from the 29th of May. We did 452,000 contracts there. You're coming back with 131,000 thus far. That's saying it's going to go into that, reject that price, and then make another dash for the 63, 62 area, which was the May 6th high. That's the way that baby's set up right now. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow is down 19. Nasdaq's off 5.5. S&Ps are off 7. We're going to be right back.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
It's hard to believe that it's been almost 2 years since Andy Hecht started his newsletter, The Technomental Commodity Report. In that time, he's delivered many winning trades for his subscribers. To commemorate Andy's 100th weekly issue of his newsletter, we're rolling back the monthly price to the introductory rate of only $59. This is a one-of-a-kind special that is only around until Thursday of this week, which is the day of his 100th issue. By taking advantage of this 100th issue special, you can lock in Andy's original introductory rate for as long as you remain a subscriber. That's an incredible 25% savings every month off the retail price. Andy delivers in-depth analysis of the commodity market every Thursday in each issue of the Technomental Commodity Report, while providing specific trading recommendations on ETFs and option positions within the commodity market. Don't miss out on this special, as there are only hours remaining. Sign up for the Technomental Commodity Report right now at the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials down 24, NASDAQ off 5.5, S&P's off 7.5. And what you're going to see here now is a slow move downtown, inch by inch. Life is a cinch. You know, we'll see where this whole thing does shake out by the end of the day. But what I expect you're going to see is that you're going to see more selling pressure basically coming into the marketplace. And what's going to be really wild is that the DAX, you know, has gone from negative to positive. The DAX itself, though, has about another hour of trading, so doesn't mean it's going to stay at that particular point. But the way that we're trading out right now, like if we take a look at, let me just take a look at these E-minis for a second. So we're at 2108 right now, and what we have is that you got into ICE. You did it with dramatically lighter volume. Okay, so watch what happens here. What the market's going to try to do is this. We're almost right at it, which is pretty cool. We're 2107.75. The first leg down should only take you like just 2106. And where I'm going with the 2106, folks, the 2106 is the high of the low spike of 2099. And what you have here is this, is that spike had huge volume. So the first time down, you know, that's going to be like the range. And what you'd love to do, whether you're a bull or a bear, and if you're day trading this deal, you want to see it come down into it, and you want to see how it handles it first. If you get a rejection, and you have, let's see, we're 6 minutes into this bar right now, so the volume is still light. You're 6 minutes into this bar. But you have to, if you get into the bar, then the reality is that, hey, guess what, man? It's gonna make a run for the bottom of the bar, you know? So it's just all you have to do is hang out for a few minutes and see, you know, what that wants to do at this particular point. Now, what's really cool, okay, is that if you get into the bar and you get into the bar good and then don't have the volume, what are you going to do? Well, guess what? What you're going to do, you get the DAX still hanging up there. What you do is you'd be buying that baby and then you'd be going for the 2112 once again. You know, so it's going to be wild watching this whole oh, man, I'm telling you. When these numbers start hitting, folks, the price spread yesterday was 12 S&P points. The spread out here today thus far is, oh, that's interesting. Yeah, wow. The spread is today is 12 also. The spike down hit 9.9. The spike up hit 12, 11.75. So that's your spread out here right now. You know, it says quite a bit, no doubt. Dow, you know, the Dow stocks basically giving it up pretty quick. The Dow stocks are moving around quite a bit. I mean, big time too. Inside the let's go to the bond market. Bonds are screaming, folks. And what you're going to be able to get out of the bond market today is this. We do the TLT. Take a look at the TLT. What the TLT did yesterday is that it broke its B point and it broke it with volume. Now, we get a counter trend bounce out here today. And that counter trend bounce, if in fact this is a ABC structure on the way down, what you're going to see with the TLT is that you're going to go up with dramatically lighter volume. Yesterday we went downtown with 14 million. You know, we're at 2.9 million right now, which is pretty good, by the way, for the TLT. If the TLT does anywhere about, let's see, you'd be looking for the TLT to do about 10 million. And even 10 to, let's see, we did 13 off the high, and then we did 14 yesterday. Yeah, we did 13 on June 1st, and we did 14 yesterday. So what you'd be looking for is about 12 million. 12 million, we say that's a counter trend bounce. Less than that would even be more so a counter trend bounce. And what that would set up is that sets up a complex ABC structure on the way down. That structure, however, would be bringing the TLT down to the 110 area. And right now you're at 118.94. The yield right now on the 10-year is 2.305. That's not the end of the world. You know, and yields, of course, across the world, folks, have gone positive. You know, when we were talking, you know, just a month ago, there were plenty of yields that were negative. Bottom line is that as you're looking at yields right now, here, I'll bring this up for you so you can see how this is shaking out. Right now, you can see if you look at this, first we'll look at the 10-year. And when you're looking at the 10-year, what you have is that we had United Kingdom's at 2, you get France at 1.1, we get Germany at 0.85. You stay right there, folks. We're going to be coming right back. We're going to be talking from Bob from Hartford, Connecticut. We're going to be talking Apple. This is Tom O'Brien. This is TFNN. Right now, you got the Dow Industrials are down 43. We have the, there she is. We have the NASDAQ off 8. S&Ps are off 9. We're going to break back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 79, NASDAQ off 16.5, S&Ps are off 13. Now watch this. I'm going to bring this up so I can show you. This is going to be, I'm going to actually show you the Nadex platform simultaneously because this is, I'm going to flip these positions around again. So what do we have out here? Let me bring this one up for a second so you can see this shake out. Now, we were talking about, I'm going to bring the S&Ps up first. So what we have is this. I'm going to be quick on this too. So, okay. So you have, you're coming down into that bar, and you're coming down into the bar, folks, with dramatically lighter volume. So this baby's going to get it, it's into it, okay? But you're not going to, you more than likely, I suspect, you don't have the juice, okay? So it can test it, it'll test it, it'll fly around, go back topside again. With that being said, I'm going to bring you back over here. Now, you're looking, this is the Nadex platform, okay? And so what you're seeing here is that if you're trading, I trade the Nadex, the NDX spreads. And the reason for the spreads is this, is NQM, is that you're going to see that they're the 80-point spread. And what happens is that you have a defined risk trade. What you're going to see, you look at the indicative index is 08, and you're going to see this at 13. But what I want you to wrap your head around, this is what's important, is that as you get closer to the bottom, of course, you're going to be premium. Here, I got to sell these right now. I got to buy them back, rather. Buy those, buy that. Now, you see a maximum loss in profit, but that's not it. This is just a flip around. You'll see it to be a profit of like $400 on 2. Buy. Make sure I got this. I'm short. I'm buying. Okay, that's good. Okay, so you can see, bang, those are gone. Okay, so now what did I just do? Well, let me see. If I go into the history foil, I'll show you this. And the order history out here, what you're going to see, where is she? I'll pull this up for you. What you're going to see is that the first get-go was going long, going for the spike up. The second one was selling it. Now, the next one that you're going to see out of me here is that, let me pull this over here, is that I'm going to turn around, more than likely, is wait for this bar to finish out, and then turn around and do a defined risk trade again, going topside, okay? So this, man, I'm telling you, the larger issue, so the larger issue here, folks, is that you can expect, at the end of today, you're going to see markets that are down, and you're going to see markets that are down, and we're going to have some juice behind the move down. You know, each day we're getting closer to a big rollover, because this is a subtle rollover. That's what this is, okay? And subtle rollovers are so dangerous, it's unbelievable, okay? Now, what I normally do, even if I'm trading the NDX product, I'm always looking at the S&Ps too. The reason the NDX product I'm trading, by the way, okay, is that your tick value, the spread is dramatically closer. You're giving up only 2 ticks. You know, and when I was showing you the indicative value versus where it was, as long as you're just moving back and forth on that aspect, you're getting the price spread both ways. Now, if you kept them all day, you wouldn't get it. You wouldn't get it all way. You're taking a little bit higher risk if they're not in the middle. So, an 80-point spread, if you're in the middle, it's tick for tick. If you are lower or higher, there's a premium involved there because of the defined risk of it. Let's see if there was the thing that's pretty good. Let's see, Fed urged by IMF to postpone rate liftoff to first half. Oh, this is hilarious. This is so this news evidently just come across, and that's what's whacking the market. This is hilarious, actually. So the Federal Reserve should delay raising interest rates until the first half of 2016, the International Monetary Fund said, as it cuts its U.S. growth forecast for the second year. The lender said that the dollar was moderately overvalued, and further market appreciation would be harmful in a statement released in Washington on Thursday at its annual checkup of the U.S. economy. Good luck. See ya. Don't want to be okay, so let's go back over. I'm going to go back over inside. Let me do it this way. NQM5. Because I think I'm ready to load them up the other side again. M5. Okay, what do we have here? So I put this on a. Yeah, you can see this is the rejection. There it is. Okay, so you know that was the rejection. So what you can expect now, this is too quick. I mean, I can't. When it just came back down, that's where to put it on. It's a little bit tougher doing the show at the same time, but it's pretty cool. I love it actually. So what you have now? So now what I'll do is this. Now what you do is I just wait for the top again and sell it again. You know, because that was the bottom, and it did exactly what it should do. So check this out. This is so cool. So the first spike that we went higher this morning, right, inside the NDX, you went from 0.5 to 93. You get at the top of ice. When we just came back down, it's pretty sick. You went to 0.4, and the top of that high is 0.6. Rejected it. You have lighter volume, so now you can do a little bounce. But what you're going to see is that as you went into that, the volume did go up intraday compared to the rest of the bars. So what that is saying is when you put that all together, that's building cause in order to get to lower price. That's the way that you basically read that structure, supply versus demand, about where we are. We take a look at the, let's go over to gold, GCQ. So inside gold right now, oh, this is getting interesting. Okay, so check this out. You're at 1174, but there's no more sellers. Now you're at the lows. Now we 1170. We'll hit 1173. We're at 1173.80. You have 110,000 contracts. What you can also see. Oh, I'm sorry, man. I'm sorry. Here, let's go to Bob in Hartford, Connecticut. Hey, Bob, what's going on?
Hey, Tom, good morning.
Thanks for calling. Thanks for holding, man. I'm sorry.
It's all right. Hey, I got a short going in on Apple, and I was just wanted to see what you thought about it.
Now, are you in the option market or the actual equity market?
The equity market. I shorted it like 130.23 or something like that. Okay.
Apple, that's not bad. I mean, maybe run down to 126 for you, 123. Where I'm going, Bob, is that's the 6th of May. Apple, yeah. I suspect, will fall apart, but it's not going to fall apart until the market falls apart. Because Apple will be, right. There's so many funds that own Apple, folks, it's sick. And they're not going to basically unload that until, basically they have to. So it's something to keep your, you might want to, do you trade options at all?
I haven't in a while.
Okay. The only reason I'm saying it is that with Apple, you got $130 stock, right? And because Apple, so check this out, folks. This is pretty wild. Because Apple's been flat for so long, you're not paying a big premium inside it for the option, which is pretty wild. You know what I'm saying? Like,
yeah,
an in-the-money option is only $1.97. You know, if we go out to, you go out 60 days, and in-the-money option is only $3.45. So
wow.
That's pretty intense when you know what I'm saying? Instead of 130 grand, you know, you're at 3,000 or something, or instead of 13 grand, you're at, hey,
Tom.
Yeah.
I was looking, I know this is a technical show, but I was looking at the fundamentals, the legal insider buying.
Yeah.
And all the management is dumping Apple. They've been nothing but sales for selling out all their positions the last 12 months. It's incredible.
That's important. No, listen, I appreciate you bringing that up, man, because you know what's really cool is that, you know, sometimes folks, when they are buying it, okay, you know, it's like, are they buying it through options, or how are they buying it? So that's important. When they're selling it, okay, bottom line, it's real simple. They're selling it, okay? And as Bob just said, when you're selling something, what you want to do is put yourself in that position. If you're selling something, do you really think it's going to go higher? If you have kids in school, if you have things you want to do, that's a certain amount of shares. The way I look at it, say, okay, I'll take, you know, I can understand that. But when all of them are selling it, bottom line is that they feel like, you know, hey, guess what? Their reward versus their risk is not there to hold that stock. And so it's like, push it out to the public, and, you know, so that's a good number, man.
There's also a gap at the 100 level, which could get filled in the next couple of weeks.
You know, listen, you know, I think Apple wants to go a lot lower. There's no doubt about that. The real key is going to be, you know, when does the market crack? You know, and that's the real, you know, that's the real issue here. I think we're right here. I mean, you know, the way that the market is traded in general is saying that, oh, guess what? You know, because this volatility, that when you go back and forth like this, that this is vicious, investors can't stand that. They absolutely can't stand it. Listen, there's a lot of traders that can't stand it. I love it, but I happen to also know that when you go back and forth like this is not a market that goes higher. This is a market that goes a lot lower. And it's just one of those times, because every time I even go long, even intraday, I will not even go to the bathroom, because I know it's just going to be a matter of when that trapdoor opens, man, and there's no bids on the other side. And you got to make sure that, you know, even intraday, that you have something to be protected. So.
All right. Thank you so much, Tom. You're the best. I'm reading your book. I appreciate it.
Well, thanks so much, man. We appreciate you growling and prowling with us out here. And don't forget, folks, if you do enjoy the lineup at TFNN, please tell 3 people. We really appreciate it. And make sure that they know that you can get all the programming right on your cell phone. TFNN.mobi. If you, just for audio, if you want to get the Tiger TV, which comes in great, by the way, right on your cell phones, just go to TFNN.com. On the right-hand side, you see that box. Hit that box, bring it up. You get the Tiger TV totally set up. Let's go take a look at this dollar index. Well, actually, I want to take a look at the euro first, because what you have with the euro basically got up, well, it did get up to the 113.80 level and gave it up. You know, so now I suspect there's going to be a little backing and filling here inside the euro. And if we take a look at the dollar index, what do we have? 1 second here. DXM5. Yeah, the dollar's going to do a bounce. You're going to do a short-term bounce in the dollar. Nothing heavy. It'll come up to ice. The dollar, right now, we're at 95.40. That can go to the 95.75 level. When I come up with these numbers, by the way, folks, if you happen to be just in your car listening, those numbers are always predicated on where the volume characteristics are on the way down and on the way up. For some reason, they are. Darryl Martin would, when I start showing him how these things work, he calls them magnets, and they are magnets. Somehow they're magnets. They go up, they test them, they'll make them, break them, they'll do one or the other. I mean, the market's job on a continual basis, that's all it is. The market either bust higher or bust lower. That's all the market wants to do on a continual basis. So if we take a look at the small caps are going to be the small caps right now, folks. They haven't tested the high yet, but this is some deviance. Now, the Russell 2000 yesterday got to a price point of 1264, the actual index. That, let me see this when I put it up this way. Oh, this is going to be good to do. Okay, so we came down on 259 million, and you up with 229. It's not bad. So when we come off the high on the 27th, we had come down with 259. Yesterday went up with 227. So that's close. It's almost saying it wants to do it. But if the Russell did close where it is right now, tomorrow, that'd be a failure. That'll be a failure on the spike from the 15th. Let me see this on the weekly now. Yeah, you'd have a failure. You know, ooh, this is interesting. This is what's important. Wow. Okay, so check this out. I was just giving you the dailies, right? On the weeklies, folks, it's not even close. On the weeklies, we came down with 1.4 billion, and we're going up. Thus far, we'll probably do about $1 billion. That's not enough. If the Russell closes under 1261, that's a major failure. It'll have price and volume too. Ooh, that's sneaky, and that is sneaky. There's no doubt. And as look at that, the Arad almost is a Gartley. One of the Tigers saying is out of Gartley. So let me just see here. 11 to 60. That's 49. 49, 59, 69, 79. Yeah. Well, yeah, it is. That's interesting. Yeah, 64. Okay, so check this out. It went to 64. It's a 79. If it went 1279, that would be a perfect setup for a Gartley. You know, bottom line is that, yeah, you do have a Gartley. Now, the difference would be of a Tiger Gartley is that I wouldn't take that. The reason I wouldn't take that is that it did take out this swing point with volume. What I'm looking for in a Tiger Gartley is that A to B equals C to D, but as you go over that B point, you take it out with lighter volume. This is Tom O'Brien. This is TFNN. Get ready to pull that trigger again, folks. We get that bounce coming in again. What a trip this is, man. Dow Industrial's up, down 58. NASDAQ is down 10. S&Ps are off 10.5. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. So we have the Dow Industrials up 69, Nasdaq's up 11, S&Ps are up, 11.5. And don't forget, folks, at TFNN, live programming starts at 8 o'clock in the morning, 8 to 6 in the evening. All of that you get right on your cell phone, TFNN.mobi. Now, let's go over and take a look at the transports. So the transports, folks, were the first indices off the highs in an extreme way. Right now, we're trading out at 84.87. And when we take a look at this, what you're going to see is this. This is going to be a bounce on dramatically lighter volume. Thus far, we've done 50 million shares versus 100 versus 86. So the way this is straightened out, let's see, 50. Oh, it's going to be close, actually. No, what day is today? Thursday. It's going to be close. We'll see if it can do 86 million. So we did. Well, it'll be close. It might come in like 75. So if it come in at 75, we'll see whether it can break that downtrend. You come in at 70, you come in at 68. Bottom line is that is still building cause to get into the October 15th level. That October 15th level is out there. When you take a look at the transports, it's screaming, okay? Because the transports are exactly where we were last year. 1 year. The difference being that you are at a level after you come off the high with dramatically lighter volume. So check this out. October 15th, the October of 2014 rather, we come down with 89 million shares and 130 million. Now watch. Then we made a high with 56 million shares, and then we tested that with 64. So correlation, 130, and then half of that. Now, that's not enough to say that, okay, are you going to go back there? My take would be that, yes, you're going to go back there. But this is how the art of time of the trade works. Then you come off the high, and what do? As you come off the high, volume expands again. We do 82 million shares. We do 80 million shares. We do 84 million shares. We do 86 million shares. When you see something like that you're building more cause, you're building more velocity, that is another higher probability move that, number one, you're going to go after it, and number two, that sellers are trying to get out of the gate, and they're trying to get out of the gate as subtle as they can, but it shows up inside the volume as you move to lower price. So picture something. As you're moving to lower price, if you have volume that comes in, that is not volume that is buying, because what would end up happening is that if you were buying, what would end up happening? Well, bottom line is you wouldn't be going to lower price. You'd be going to higher price. So the subtlety of a sideways move, like we've been in for 6 months, is huge, because when you're at a sideways move and you have light volume, that is monster distribution. And the longer that you are at a high on a sideways move, what does that mean? Well, what that means, folks, is that the distribution has been going on for a longer period of time. And inside the Dow Industrials, we can say that this distribution has been going on since October of 2014. And that's a problem, because once the operators move out enough of the equities and have cash on hand, what you'll end up seeing is that that's when the bids disappear on the way down. You know, markets do 4 things. You have accumulation at lows with light volume. You have markup, and the longer the accumulation at lows, the longer the markup can be. You have 2-3 years of accumulation at lows, sweet. You're going to have some good markup going. Markup with high volume on the way up, distribution with low volume, markdown, vicious volume on the way down. You stay right there, folks. I'm Mr. Basil Chapman's going to be coming up next, growling and prowling with you. Dow is down 76, NASDAQ off 11, S&P's off 11.5. Basil's going to be coming right up, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.